Hey guys, you've joined into Money Control. I'm Manisha Gupta, and we're talking about the crude oil prices today because we have seen it getting stronger and stronger on the charts. $120 per barrel has been holding for the Brent prices for many days now, and the NYMEX has also hit $120 today. And so we are not very far away from that 13-year highs of $125 per barrel that the crude prices hit in the month of March itself. So we have been inching higher for the last 6 straight weeks now. This is going to be the seventh straight week of gains for the crude oil prices. As I said, it's getting quite strong on the charts there. Well, if you look at the Brent prices, the 14-year highs that we hit on that one was at around $135 a barrel. And the markets do believe that with the kind of supply tightness that we are seeing in the international markets, we're not too far away from those kind of levels. Given the fact that the demand has been strong, it's coming back in case of China, where the COVID restrictions are being lifted. It's staying strong in US as well, where the summer driving demand season also seems to have picked up quite strongly. And then the Asian demand is unsatiable. We have seen India continue to buy very big cargoes from Russia. The expectations are something around 700 to 800,000 barrels is what we've seen coming from Russia into India as well. That, of course, is at a discounted pace. But having said that, India has a limited strategic reserve, tanks as well when it comes to buying crude, and it wouldn't be a long time before those are filled, and India will have to come back into the markets yet again to buy crude at the higher prices there. But the other important thing is the US oil inventories; those have continued to decline as well. We've been telling you on how the US inventories are nearly 15% lower than the 5 year average. That clearly has been a supportive factor. And then not just crude oil prices, you have US gasoline trading at a record highs, natural gas prices are trading at a 14-year highs. Coal is trading very close to its all-time highs. So everything that you see in case of energy has been surging. Well, actually, when you look at the US futures, even the biofuels prices have been running to a multi-month highs. So good going there as well. More interestingly, you have various banks and brokerages now coming out with new forecasts in sense of prices, and all of that is on the higher side. Goldman Sachs came out with a report which says that the higher prices will incentivize new production. It would lead to demand destruction, and that is when the prices will correct. But that will happen only by the end of this year. For this quarter, between July to September, Goldman Sachs is looking at prices of $140 a barrel. Overnight, there also is a report that came in from Trafigura, which says that the crude prices are headed to $150 a barrel as well, because there is strong demand into the markets, and also higher prices are the cure for higher prices itself. So by the end of this year, they are expecting a demand destruction and prices to come to around $100 or even below that. But as we've been telling you all the time, that the crude prices will first jump higher and then see demand destruction, more production coming in on board, and then see the prices in a decline. Until then, the expectation clearly is that we are looking at price range of anywhere between 110 on the lower side to 140 on the higher side for this quarter and the next quarter as well. So it is going to be only by the fourth quarter that we will see some price decline there. There also is a report from JP Morgan, which I also want to put forth, which says that Russia has cut about 500,000 to 700,000 barrels per day of an output. Well, that's an important one, because even as OPEC and allies have committed to higher production in the month of July and August, how much will they actually be able to deliver? There's a lot of skepticism into the markets given that as well. So is there any new production coming in from anywhere? Not really, because the OPEC members have clearly maxed their capacity. The only ones that can increase production is Saudi Arabia, UAE, and Russia. Russia is out of the picture. Saudi Arabia and UAE, if you look at the spare capacity within OPEC, it is less than 2 million barrels per day. So clearly, there is not so much of supplies that the markets are looking at. The war is still ongoing. Inflation concerns are still on. You still have various other concerns, supply disruptions into the market. So, well, yes, crude prices for the near term could be really headed higher, is where the maximum bets right now are going to.